Hello. So guys, this is a mic test. Let me check at my end by increasing the audio of the playback here. It looks to be working fine on my end. So hello and welcome guys to the 26th edition of the Trading Opportunities webinars. And my name is Nirav Yadav. Before we begin, I'll ask you guys, any of the participants who is present here online in the webinar right now, to check and confirm if the audio as well as the screen share is working. Can you confirm that by typing in the comment sections while I load up the other necessary stuff over here? Hello Norm, thank you for the confirmation. Hey Steve, hope you guys are doing good. Good morning, good evening, good afternoon, whatever it is at your place, guys. Okay, so let's not waste any time. It looks like everything is working. So just give me 1 second and we'll start off. Okay, there it is, all set. So let's begin this webinar with the very quick disclaimer here, suggesting on screen that all content presented here is purely for educational purposes. I'm not soliciting any buy or sell. If you do go on to use the views presented here for your trading, investing, or for any other activity, you yourselves will be liable for your profit, loss of profit, or any other situation arising from you doing that. Rest of the details you can check for yourselves over here on the disclaimer. So with the legalities out of the way, let me give you a quick introduction, guys. My name is Nirav Yadav. I'm the admin and owner of 50eyes.com, which is a website where I've been presenting my views on markets, stocks, commodities, global indices, Forex, cryptos, etc., for 7+ years. And I also am the owner of 50 Eyes Market Analysis YouTube channel, where I am hosting this 26th webinar in the series of trading opportunities webinars. A little about this webinar: we conduct 3 of these webinars every week: Monday, Wednesday, and Friday. 2 PM GMT is the timing for these webinars. And so far, we have been very successful in the last 24 webinars. So to the 25th one we will discuss today. So in the last 24 webinars, we have spotted 21 big moves or big trading opportunities. Keep in mind, these are only the big moves I am counting in and not the minor moves which we pick up here and there. So with that, I would like to just mention that these webinars have been going very successfully. And if you want to take the most benefit out of these, do join in live instead of trying to check a recording, because the opportunities might be gone by the time you do that. With the introduction about the webinar, let me just give you a quick introduction about the work I have done over the years, and not just these 21 webinars or 24 webinars, sorry. So this is a track record of my work since 2016, and I have compiled an accuracy report that what I said, if it, so this is what I said, if it worked, we have written it over here. If it did not work, we have written it over here and given what do you call check for it. So in 2016, accuracy was 83.34, 2017, 87.50, 2018, it was 84.61. And you can just check all the instrument name, the date, the analysis, and what happened. So on and so forth. If we go about 2019 is 84.88. Again, you can scroll anywhere, check any of the dates, the instrument that was discussed on that particular date, and the analysis and the outcome. 2020, again 88.52. 54 out of 61 worked out. 2021 is 82.22. So why I'm showing this off is because generally there's a big thing, even if somebody has an accuracy of 60% plus, but here I have 80% plus for 6+ years. And this, I believe, is outstanding and most likely industry leading, right? So that's why I just wanted to show it off to you before we actually begin the webinar. Okay, with my introduction out of the way, let's head over to the webinar and how we will proceed with it. Gracias, Johan. So first of all, I'd like to just mention that these webinars, we will be discussing a fixed number of instruments, and we already have pre-decided them because we have been following them for the last 25 webinars. We will go over with the discussion of Euro USD followed by EURCAD, USDJPY, EURJPY, crude, gold, S&P, Nifty, and at the end we will check Bitcoin. Our discussions will entail the views that I have on these markets based on my proprietary analysis of advanced Elliott wave and price action concepts, right? And at the end of every discussion of every single instrument, I will ask you guys if you have any doubts. If you have any, you can just type that in the comment section. If not, I would request you guys to confirm that you understood whatever we were discussing by typing in understood or clear. That is the way we generally proceed with these webinars, right? And I don't think I have anything to add to this part. So let's just head over to the actual charts and start off. So let's start our discussion with the Euro USD. And by the way, if someone can again confirm if everything is working fine, audio and video, just type in working fine, and just one final confirmation before we actually begin the webinar would be nice. Hello, Devender. Hope you are doing well. Thank you, Madhavji, for the confirmation. So let's head over with our first analysis. Here on screen, we have the chart of Euro USD. And if you guys recall, we were able to capture this leg up, right? And it was suggested actually over here, partial entries, not full entries, because we were having another bias that it might just give one leg down before the up. So partial entries were suggested at this point, and it sort of achieved our minimum target and seems to be hanging in between the target minimum and the next target, or let's say T1. So right now there is no new update on it. It is possible to count it as the wave fifth complete. It is also possible to count it as the wave fifth in continuation. So in a situation like this, what I generally like to do is trail this thing. So currently I'm taking this red line as my trail based on the entry levels that I had. So different people make different entries, so it will be different for everybody. But currently, until it is above 1.07398, existing longs are to be held, in my understanding, on my positions. Right. As for any new positions, nothing new for now. Right. And those of you who are joining in for the first time in these webinars, I'll just give you a quick outlook of our Elliott wave count here. So we are expecting that this is the count this market is following from this point of reference around 0.95338, roughly speaking. We are expecting that this market is heading up in an impulsive formation, and impulse in Elliott wave terminologies is something like this. The first leg in the upward direction is called a 1, followed by a 2 in the downward direction. Then the upward direction again is 3, followed by downward direction, and the upward direction again is 5. So in this particular case, as you can see, we are expecting that this market is currently in the fifth, because we have the 3 complete here, the 4 complete here, and the fifth, right? And as I said, we were able to capture this fifth right at the turning point with partial longs. So I mean, that's it. This is a really simple analysis. We are in the fifth. We expect that once it's complete, there will be a possible reversal. If the reversal is small, it will continue to the upside. If it is bigger, then we will reiterate or reevaluate, the situation. So that's my quick take on Euro USD. Let me know, guys, if you were able to catch these longs, if anybody of you were able to actually get in. And if not, just let me know if the analysis is clear enough before we move on to EURCAD. Devender, Pawan, Madhavji, Johan, Steve, Norm. Hope you guys are with us. waiting for your confirmation before we move on to our next chart. All right, guys, thank you for the confirmation. Let's head over to EURCAD. So EURCAD, actually no real update on EURCAD as well, but I'll just quickly summarize all the stuff. So EURCAD is actually not triggering either our longs or shorts. So I'll just first of all go with the analysis we have. So analysis we have is that we expect that it is following a possible triple zigzag. There is an alternate count, but it's not really of much consequence here because they are both pointing into towards the same analysis. So what we currently think is that this is something like y and then x, and if this count is correct, then we expect the z to continue higher and it should take out the last high, basically go higher than this level. So this is what we really expect on EURCAD. The thing that I proposed in the last webinar was that I wasn't very sure or not very interested basically in taking trades on this counter until it showed some sort of strength. So in this particular case, because these webinars are held with a gap of 1 day in between, so I can only discuss about swing strength and not intraday and precise price action movements that would go beyond the scope of these webinars. So what I basically proposed was that if the market goes higher than this 1.45379 alert, I will be interested in looking for some long opportunities. It still hasn't done that, right? So it is still there. The alert is still there. If it goes higher than that, then intraday longs for the target above wave high. So that is what my plan is on EURCAD, right? Other things that it can do is that X can become much more complex than ending over here, and it can go sideways, or maybe it can go sideways by actually even breaking the downward bounds. So all those things are possible. That's why I said I'm not very interested on this counter. EURCAD is a wait and watch with minor intraday long possibilities. Nothing much to add here, so I won't waste much time. You guys let me know if you have anything you are unclear on. Otherwise, we'll head over to USDJPY followed by EURJPY. That's the interesting one. Johan is asking, my English is not very good. Can you say that the correction movements are coming in the pair? I would not go so far as to comment on all the pairs. Not every pair will have a standard correlation with the USD related pairs. But yes, they generally do have similar movements. So yeah, you can have a thesis or a hypothesis in that regard, Joanne. But as I said, we only cover 4 pairs here: Euro USD, EURCAD, USDJPY, and EURJPY. You will find that there are some correlations. USDJPY and EURJPY have some correlation, and Euro USD has some correlations, right? Later for me, still at an issue trading will be real time for your webinars and talk to you in real time. But happy to be there. Hey Antoine, nice to see you after such long time. Yeah, just talk over here on YouTube webinars. I don't really promote third-party platforms anymore. I just work here on YouTube, creating my own audience here. Also, I think it became a bit confusing when I was sharing 2 webinar joining links with people. So from now on, we just work on YouTube. So anyways, now let's head over to Johan. Sorry about that. I'm not very clear about your whole question, but I think I got a little bit of the idea and I try to explain in that regard. If you still have any doubts, you can type it in. I'll check it after USDJPY. So let's head over to USDJPY and let's see what's happening over here, right? So USDJPY, we had our triple zigzag correction continuation to the downside as our hypothesis, which was triggered with the sell trigger line below 130.874. So basically what we really mean by that is we were expecting that from this box or this point of reference, which is at the price level of 138.153, we were expecting a structure like this. The first leg down we would call as an A. This movement in the upward direction we would call that as B, and then next leg down would be called as a C. So in the actual price chart, this was the A, this was the B. By the way, there are some other placements available here, but not really of much context. We can just take the B and go forward with much more interesting or important price action discussion. So now comes the last part, which is the C, right? So currently it looks like this market is progressing in the downward direction. Now I would like to just point out here that we were able to catch this downward move because we had a sell trigger alert around 130.874, and this was actually discussed in one of these live webinars, whichever webinar was near that. I think 21st webinar maybe, or 28th, I don't know. We discussed it in detail that if it goes below the sell trigger line, then I expect the wave Z to continue to the downside, which is what exactly happened. So if you were able to catch it, by the way guys, then do type it in the comment section that you were able to catch the USDJPY move. That will allow the new participants or the other viewers to know, right? If not, then you guys can just check one of my past webinars where I have actually stated the whole setup. So far we have been able to catch this much percentage of move to the downside, 2.73%, which is not small by any means, right? So leaving the past glory to past, now let's see what's exactly happening now. So let's head over on the 15 minutes chart. And on the 15 minutes chart, we are expecting that this might be doing something like this, right? So as such, I think we have even got this wave, the corrective part. But anyways, leaving small movements to small movements themselves, what we really expect is that from this point of reference around the price of 134.769, we expect something like this, right? And this would be called the wave 1 down. The upward movement would be called the 2. The next leg down is called 3. The next up move is called the 4, which I think might be continuing, followed by the last leg down. So this is of point of interest to us. It does look like the fourth will be following one more downward movement, right? However, I am not 100% sure on that. It is definitely possible that this was the 3, 4, and the 5 is very small. It is a less likely scenario, but given that this market has done this before, that I have seen this market create extremely small wave force and then complete the movement without actual warning. So that is a likely possibility, right? But at this current point in time, I will say that it is a low probability scenario. And the reason for that is simply that our target is still not achieved, but actually, practically speaking, we shouldn't really bother ourselves with this small movement. But generally, what I see is that these targets generally are hit and surpassed, because all we really generally consider are the minimum targets and the next to the minimums. So the point being, if you are still short, just keep trailing based on your entry, right? Second thing we can do is to become a little bit more specific is we can just figure out the 38.2 retracement level. So if you are going to still trail it, and instead of booking partial, which I highly recommend that you book partial and trail the remaining, let's say book 50% and then trail the remaining. But if you are going to be strict about things and not book anything, then your trail should be somewhere a little higher than 38.2 line. So a little above 129.377. That should be your trail for the existing shorts, right? I am not recommending any new shorts here. And that's, again, I'll repeat, that's the reason you need to attend all of these webinars. Once we catch a trade, we just mostly ride it until it's working, right? There's not going to be trade in every single instrument, every single webinar. So you gotta wait for these big moves, and to catch them, you need to attend them live every single webinar. So that's about it for our discussion on USDJPY. Just to summarize, we expect that this wave, let me just quickly do it like this. We expect that this wave 4 is still in play, hence it might follow Hence, it might follow one more leg down, which should take it to our target level, right? However, there is no confirmation, so just trail your positions with stops or trails above 129.37 because that's our wave 4 target 38.2. Let me know, guys, if you have any doubts in the comment section. If not, please do type in clear or understood over here in the comment section so that we know everybody is on the same page. Antoine is saying always watching the webinars even later and put comments later. Yes, Antoine, I have observed your comments and I appreciate that a lot. And Steve is saying he's still short EURJPY. We'll just discuss that in the next chart. Okay, Johan, you're welcome. Thank you, Norm, for the confirmation. And what about the other participants? I see a lot of people are online here. I'm not sure what you mean. Well, it is the value that is target profits. If you mean that, that's 126.934. And do keep in mind, we are talking about holding shorts for people who entered at our entry level, at our short trigger level, which was around 130.873. I don't know what you entered at, so I wouldn't know what you should do in the position you are in. Okay, guys, I think that about covers it for the doubts and questions you guys had. Let's head over to our next chart, EURJPY. Thank you, Nikosi and Madhavji, for the confirmations here on YouTube. Okay, EURJPY, we had an updated count on this counter. In the last webinar, or maybe the last webinar, we updated the counts and they are actually followed precisely well. Picture perfectly, I would go on to say. So let's see what the update was and how is it performing. So in the last webinar or last to last webinar, we updated the counts to suggest that this is the actual movement, the wedge pattern heading in a downward direction in price action terminologies, wedge pattern in Elliott Wave terminologies, a diagonal, right? We expected the diagonal ended over here as the wave 1 or A. We generally expect after the diagonal completes like this, we expect a price movement in the upward direction followed by another leg down, which should take the market lower than the last low. Right? So if this was the last low, right? If this was the last low, then we expect the market to take this level out. So this is the last low here in this case. Right? It has not been taken out yet, so that basically means our target minimum is still active, right? However, that comes with a big caution, which we'll discuss later. Let me just quickly put the things on the screen here. So what I'm saying is that this is our target minimum, let's say TMIN. And I'm just saying that we were able to catch this short as well, by the way. And thank you for confirming. Somebody actually has written that they are short on EURJPY and booked partial forwards. Yes, Steve has mentioned in the comments. Thank you for clearly mentioning it in full length that you were short on EURJPY and booked partial profits, because when people read it, they might not know what the context you were speaking in. That is, if you just write in shorts booked profits, they might not know. So if you guys are taking these trades and following along, please do type in with clear statements for the upcoming new audiences to view. Now, getting back to the actual analysis, we suggested that once this market close below this trend line, I should probably use a different color here. So once this market goes below this trend line, yes, this blue one, this will be a short, right? We suggested it when the market was actually literally here. That was when we were actually conducting the live webinar. I drew the channel. As you can see, this orange channel, and we suggested the whole trade setup. So this is actually our entry, right? And this is our target minimum. You already know that. Now the strategy generally is to keep holding it But we are not fools. We know that analysis may or may not work completely well. So it is always better to book your profits when you are seeing a big amount of it. In this particular case, it does look like we have covered a very huge amount of movement, right? So it does not make much sense to hold it till the absolute profit. And as a matter of fact, we do expect it to go lower. But as I said, we don't really care. We can always re-enter the markets, book partial profits here. If the opportunity looks good enough again, re-enter again. So as I said, it does not really make sense. So based on your entry, if you entered here or maybe here or here, based on your entry, you would have or should have booked the partial profits, right? As Steve has already mentioned, he has booked some. Trail the remaining, right? So, and that's for the position we were able to capture, because I want to show off the things we are achieving here. Now that we are done with that part, now let's get to the analysis part. So the thing is, there are counter analysis also running here. Generally, they always are running. Otherwise, what's the point of analysis if there is only one thing to do? Then everybody would just forecast the whole price movement for next 10 years and be on their merry way. Okay. So the counter analysis is that 2 or B may not be here. It may just be continuing over here, right? That is, as I mentioned in the last webinar, again, is a very low probability scenario, but very low probability still is a probability, right? So I still don't think it is doing something like that, but to guard ourselves against situations like these is what we use the trailing stops and partial profit bookings, right? So in any case, if it actually does that, something like that, I mean, then even then this is still going for the 3 or C down. So our bearish bias is still active on EURJPY, and I have already discussed in length about the cautions you need to take on this position, right? And I think we have also got the downside targets. Let me quickly check. Yeah, we also have the downside target below the target minimum, which is currently coming around 135.999, right? Might as well just say 136. Okay, so 136 is also our next immediate target after target minimum. That's about it for EURJPY. I think that's more than enough discussion on one single pair. Let me know, guys, if you were able to catch the drift here, or if you have any doubts, let me know. Steve, Antoine, Johan, Devender, Pavan, Norm, Madhavji, Nikosi, and others who are currently online. Right. Next up for discussion would be crude oil, followed by gold, followed by S&P 500, then Nifty 50, and lastly Bitcoin. Thank you, Madhavji, for the confirmation. So in that case, let's and Norm also for the confirmation, and Steve. So let's head on next chart, which will be the chart of WTI's crude oil or West Texas Intermediate crude. So while we covered EURUSD, it was the first pair we covered, right? So after the webinar, you can just check the recordings. Right. Also, one more thing, guys, if you are joining in live or the first time, then these live broadcasts are done on YouTube. And if you go to my YouTube channel and hit the live button, because these are live broadcasts, so they will not be under videos, they will be under live. So if you hit the live button, you will be able to watch the restream of this webinar, 26th webinar, and the past webinars like 25, 24, whatever you want to check. Whenever I suggested whatever trade I'm saying here, you can just check all of them here. And do note that all of them are available with timestamps. For instance, if I go to the 25th webinar here, you can just scroll down in the comment section. You will find that there are the timestamps here. Also in the description section, there are timestamps here, right? Just for your convenience, I do take the time to put everything in here, okay? And before we move on to the next chart, I'll just like to make a quick small request. Guys, please hit the like button on the respective platforms you are on. That will help the YouTube algorithm to push this content higher. And once this webinar is complete, I have another request for you from you guys that you please share this with at least 3 of your communities. If you have 3 WhatsApp groups plus Telegram or Slack or something, or if you have what you call social media like Twitter, Facebook, or whatever, then please share the content in these respective channels. Why I'm saying 3 is because there are a lot of people here. So if everybody does their part, that will hugely or exponentially increase our reach, right? So that's my small request to you guys. If you are liking the content here, if you are profiting from it, then please spread the word. That is definitely required to continue doing these webinars. Okay. So let's now, Johan saying Telegram. Okay. Thanks, Johan. So let's head over to our crude oil. And crude oil is currently on screen here, right? So let's discuss what we were saying in the last webinar and let's see how things are. So first of all, in the last webinar, as I mentioned, crude has a few scenarios running. We were not very interested in discussing all of them. What I discussed was that I personally still thought that it was going for a bearish leg. Right, the analysis I have is currently this. Right, so for this analysis to play out, we expect that the X is complete here as a possible triangle. For this analysis to play out, we need the market to go lower than the level of 72.587. Now, do keep in mind that these price levels, which I suggest, are taken on O and A data feed. On the top left, you can see. If you go on to the CL1 futures chart, NYMEX chart, the price is 78.97. The current price is 78.99, and on futures it is 97. So I'm just pointing it out that there will be minor differences in the highs and lows in the current prices. So based on what data feed you use, because that will depend on what contracts you use for your trading, these levels will vary. So it's better if you pay more attention to where these levels are placed instead of the actual price. So it is currently placed at this low, most recent low. Reason is very simple enough. We expect that if it is an triangle progression, then the break of wave D low is the standard setup we expect for trading, right? It is obviously very lower than the current price, and I'm just about to discuss only conservative counts here because it has been a little bit deceptive, the price action on crude oil, right? Now that's for the bearish count. If it plays out well, we will know below this alert, right? Counter view is that if this thing is not going to play out, that is, if the wave X is still continuing in the upward direction, then some minor intraday longs or even swing longs are possible. We are not interested in them until this market really glows above what is this 80.772 on my current data feed, right? So above that, I might be interested in longs, but I personally am more inclined towards selling this market, right? But oh well, whatever the market tells us, we have to do that instead of putting our own biases. But you now have my bias as well as a clear perspective of both hypotheses. That's my take on crude oil here. Basically, nothing really to add on this one. Next up, we'll be discussing gold, and you guys let me know if you have any doubts in the comment section. If not, please do type in understood or clear or something of that sort. Are these paired trades? No, these are not paired trades. These are individual trades or individual setups we discuss on these instruments. So I'll wait for a few seconds because I believe there is a delay in my audio reaching to you guys. Okay, there it is. Thank you, Norm, for the confirmation. A little bit more participation would be nice because I see a lot of people are here online today, which is nice to see, of course. Okay, definitely to keep in the watch list oil, but we definitely have more proper setups in, I believe, S&P's 500, which we'll be discussing soon enough. So let's head over to gold, followed by S&P, Nifty, and then BTC. Gold setup actually working pretty much as we discussed last time, like picture perfect. So let's see what we discussed last time and what is it really doing. One quick thing, guys, we were able to capture a lot of these up legs. Respectively, this one, This one was it? Yeah, I think that was this one. So two here and part of this, not the whole, I think, but part of it we were able to capture. And so on and so forth. There were some other multiple minor movements, but two of these big moves and part of this move we have been able to capture in these live webinars. You can check any of the live webinars by going back in time around here, and you will see me discussing the whole setup and entries and whatnot. Oh, sorry about that, Antoine. Let me check. So there is a question about crude oil. Utility report showed us that last week non-commercial funds reduced their long positions and increased their short positions. We serve confluence. That is there, and if we are going to talk fundamentals, there is also the issue that the European Union is trying to, or not trying to, they have put a price stamp on the Russian crude, and the Russians are trying to bypass that by putting up their own insurance system. So generally, I don't talk fundamentals here, but it has it has been, I think, a very well circulated news that the European Union set up the price for crude oil at around $60 something, that nobody can buy it for more than 60 something, and the reason was because they have the control of all the insurance parties. All the parties that issue insurance to the crude oil containers are inside Europe, so they have the leverage there. They can manipulate the price. So I have heard that, I don't know, there is no confirmation for it, but I have heard that now the Russians are setting up their own insurance company so that the fleets can then buy insurance from them, and hence they do not have to get manipulated by the Europeans and whatnot. So there's a lot of politics going on. So I generally don't care much for it, because whatever is happening should be reflected on the price. Worst case scenario that will not reflect on the price chart is there if there's a sudden what do you call strike. I remember one time when I was trading, and then was a sudden spike in crude, and then there was the news that one of the fighter jets has bombed one of the what do you call crude oil wells in Israel or something. I don't exactly remember the country even. So that's the only time where price can lag, but more or less that's why I just rely on the price. It will factor in the fundamentals as well as the ongoing news and war situation, I believe. Sorry about the little distraction there. Let's head over to our discussion on gold here. So gold, as I was saying, we have been able to capture a lot of these up legs, and recently we were able to capture part of this and this one also, right? So basically 5-6 trades in the past webinars we have captured just on gold. It has worked out pretty well for us, right? Very clear and working out nicely. So now let's see what's happening here. Last time when we discussed, our target was around 1925, and the higher targets are much higher, around 2000 something. So no point dwelling over them. They are very high targets, right? We generally don't want to discuss that big of a swing position. If it goes there, nice. Our analysis should concern more of the shorter time frame perspective, because we are doing these webinars 3 times per week. So what I think personally is that it is currently in this impulsive progression, right? If the count is still working out for us, 1 second, I was trying to move the wave 4, not the alert. So if the count is still working out for us, this alert should not be triggered anytime soon, which is around at 1906. Again, keep in mind, guys, our data feed is FX here. If you are using a different data feed, these price levels will vary. So 1906 is the current price level, where I expect if the market goes below this level, then this is a worrisome situation, and I will no longer be holding longs on this counter. Keep in mind, we have been holding longs for a long time. We have captured many multiple longs, and we keep booking partials, keep trailing, keep booking partial and trailing, and that kind of activity, right? So you really have to follow along in every single webinar to know what's happening at the current point in time. So as such, it's still long. It hit our target. You could have booked partials, but if not, then again that trail is at 1906. It's still a wait and watch. Just keep trailing, and if it works out, then works out. What am I even saying? You get the point, right? It's working in our favor. Just keep trailing. Let me see if there's something else to add here. So from the Elliott wave perspective, there's a situation we have currently in the third wave, right? So this third wave, once it completes the Roman 3, then there will be a fifth Roman. So basically minimum, if this count is correct, we have 2 legs to the upside remaining. So if this count is followed, then there should be something like this, and this. So 2 legs up, right? So if things work out, we have a lot of upside remaining on this counter. Nothing really to add much here. I think I'm just repeating a few points here. Let me know, guys, were you able to capture any part of these longs on gold, either this current leg or the past ones which I just discussed? Let it be known in the comment section if you were able to catch it for the new incoming audience to view, right? And let me see the comments. Yeah, it could be the case, but as I have known that these reports can also be ignored by the price action. But anyways, it's good to know for people who check these reports. Thank you, Steve, for the confirmation. What about the other guys? There's a lot of participants here who are online. I would appreciate if there's a more activity in the comment section. KC Gold 2000. Yes, that would be the next extreme target as we discussed. If you want to check more details, you should check 25th webinar or 24th, I think, where we have discussed gold in extreme detail with the higher targets and even higher than 2000. But as I said, these are not of much use for us. We will just discuss it again in the Wednesday webinar and then again in the Friday webinar. So we will see how it goes. Thank you for the confirmation, guys. Let's head over to our next chart, which will be the chart of S&P 500, which will be followed by Nifty and then BTC. And I would like to request you guys to kindly hit the like button before we proceed any further in the webinar on the respective platforms you are on. And also, again, reiterating myself, please share the video after the webinars are complete with at least 3 of your friends, colleagues, or groups, WhatsApp, Facebook, whatever you have. That really helps us grow the audience, and that is definitely something we need at this point in time. So as you can see over here on screen, we have the chart of S&P 500. Last time when we discussed it, we had the running analysis of the fact that there might be a wave 5 up remaining. And I recall very clearly that I suggested that even if the wave 5 up is remaining, I will only be interested in intraday longs. And intraday longs were to be initiated near the last high. To check the exact setup, just check the last webinar. Long story short, swing wise or people who are interested in taking bigger risks, this long was suggested around this level, right? And for intraday, which is the situation which anybody could have played out because it was pre-discussed, this small leg up was discussed and it played out. So that is actually a trade that played out in our favor, right? So what I'm saying for those of you who may have confused is that we were able to catch this up move. Part of it, not all of it, part of it, we were able to catch it. And it is discussed live in the last webinar, which is the 25th webinar. So again, I will reiterate myself. Do watch these webinars live, guys, if you want to trade these things live and do not want to miss out on the opportunities that these markets present. Then do trade them. Do take these webinars live as they are broadcasted. And adding on to the tally, if you guys remember last time when we discussed till the 24th webinar, we had 21 trades that worked out of the 24 webinars. So adding this gold long, which worked out, followed by the S&P long, which worked out, and followed by the Bitcoin long, which actually worked out picture perfect. We have 3 more here. Plus there is the trade on USDJPY, which is in our favor, but it has not yet hit our target, so I'll not count it. So we have 3 plus 1. You get it. We have now 24 trades that worked out in the last 25 webinars. 24 trades that you may have missed if you are not attending these webinars live, right? So let's head over to our analysis again on the S&P. We were able to catch it. That's good. Now the setup is still bearish. We still expect that this is possibly a diagonal progression. And by diagonal, I basically mean that This is your wave 1 up, the 2 down, the 3 up, and notice that there is an overlap in the 4 and 1. So if this is the price territory of 1, then you will notice that there is this overlap, which makes this the diagonal formation. In price action terms, you can just call it a wedge formation. If you draw the trend lines, they should be converging at some point in future, so makes it a contracting diagonal. And the trade setup for these kind of situations is that once we see a break of this trend line, we enter shorts, right? So there is no break yet. So currently we do want to wait for a break of this trend line for any possible shorts. The shorting may take this market much lower, or it might just be a small pullback. But in either case, it should give at least 3 legs. 3 legs, by 3 legs, I mean it should give something like this. First leg down, which we'll call an A, then a correction, and then the next leg down, which should go lower than the A low. So this is the minimum we expect from this market, right? And it is possible that it has already started, that this is the fifth here. It is possible that this is the fifth and it is already starting in the downward direction. But since we don't have confirmation for it, I will not push the 5 over here. Maybe the 5 is still continuing for one leg up, and then it will go down. So we will see how it goes. Conservative setup remains still the same. Longs only below the trend line, right? So that's our take or quick take on S&P. I have discussed it in much greater detail, I think, in the 25th webinar or the 24th. You can always go ahead and check that on the YouTube channel I have by going to live section and then clicking on the webinar. And do keep in mind all timestamps are posted below the webinars in the comment section, so to make it easier for you to navigate. That is actually all for the discussion on S&P's 500 here, right? Nothing new to add here. Let me know, guys, if there is any doubt or queries you have on this counter before we move over to Nifty, which will be followed by Bitcoin. Thank you, Steve, for the confirmation. Let's head over to our next chart, Nifty 50. So last time when we discussed, the idea was that there was a bit of unclarity on this counter. We were following the primary analysis like this, and let's say X over here and Z over here, right? I personally do not like the wave Z being this small, as I pointed out earlier. So it is possible that this market has some downside remaining. At the same time, wave Z being over here with this small movement, this minor movement below the wave Y low, could also suggest that the up leg which is incoming will be very strong. So it is basically a confused situation right now, or wait and watch to be more precise. If it is going for the upside, then the upside can be expected to be really fast and swift. And if it's the downside, then the downside will be big. If not fast, then we at least expect it to be bigger, right? So just a wait and watch situation. Longs specifically, I think we have already discussed it, but only above this region between 18,116 and 18,150. If the market sustains above this region, that is closes above it and takes supports within this region, then we will be expecting much further upside movement or a confirmation. Same goes for downside. I mean, it's already weak if you are going to consider downside. And downside, we don't necessarily need a confirmation. It can open gap down and then just fall as well. That won't be anything surprising to me. That's my quick take on Nifty. If you are really looking for confirmation, then we wait for the wave Z low to be taken out. It is around 17,764, but I do not think the market will give you the opportunity for it. The way I'm currently doing trades on this is I hold overnight shorts on the counter so as to capture any possible downward movement if it happens, right? So that's the current strategy and the current way I am playing this counter. not much to add here actually, but let me know guys if there is any doubt or anything in specific on this counter before we move on to our last discussion, Bitcoin. Thank you, Norm, for the confirmation there. Let's head over to our last chart. And before we complete our discussions with this chart, I forgot that I had to make the small update. This probably is not the best time because we are in the middle of the discussions. But our plan for the next batch of training program LT is for the end of this month, or basically the end of January. So training program LT are basically personalized classes live one-to-one with me. If you are interested, you can fill the form for training program LT by heading over to my website 50guys.com/. training dash program dash LT. But do keep in mind, currently I'm only taking in students who have completed my video course. So if you have not completed the video course, not much point in filling these forms because I'm not really getting back to people who have not completed the course. So if you are one of the people who have, do get back to me if you are interested. And heading over to our last discussion, Bitcoin, very interesting. And this is the situation where you can say picture perfect is the proper word for this situation. And by picture perfect, I mean that it literally is doing everything we thought it would. So in the last webinar, if you recall, I suggested that the price target was this 20871 to 21490, 21536, sorry. I'll just write it down. So this is the box range. This is the box range where we expected this market to go if this count was being followed. Now it has sort of actually listened to me, it would seem. Just joking. It's not like it has a life of its own or anything. But because it has stopped inside the region, I think it's perfect. Now let's look at the further possibilities. Now keep in mind, we are still expecting this to be a corrective structure. Right? If it still is a correction, then we expect this market to go lower again. Right? And by going lower again, we expect at least to go in the price region between 18,180 to 17,420. So 18,180 to 17,420 and then fluctuate again, maybe even lower, but then fluctuate again to the upside before this bigger fall. So this is what we are expecting on this counter, right? And of course, if you had taken the longs, it has already hit the target, so you should have already booked the profits. If you were able to capture this move after we discussed, then do type it in the comment section for others to see. And if not, then just be cautious that we expect that something like this might take place soon, right? Now let's, 1 second, there's the extra click causing the issue. Now we got to discuss the counter view here. Counter view is that if this count is incorrect and this market is not heading lower, then it can just keep heading higher, and we don't know it yet. So when we will know it is if the market closes above 23,146. That is gives a strong move above 23,146 because there is no such thing as closing in Bitcoin. It never really closes in sessions. So strong move over 23,146, or what is this level actually? Let me see the exact values. 23,180. Strong move of this level, we expect that this counter might then fly higher. So that's my current take on Bitcoin. Possible triangle then down, and if not, then we have now confirmed level for upside as well. So guys, that's about it for this webinar. I hope you guys enjoyed it, and as always, thanks for staying it till the last, and Hope you will be doing your part and sharing the webinar with at least 3 people in your circle. That will definitely help us increase our reach. And of course, hit the like button, subscribe, and that's about it from my end. I hope to see you in the next one, which will be on Wednesday, 18th January, 2 PM GMT. You're welcome, Norm. And that's about it, guys. I'm signing off now.